Good evening, everyone, and welcome to this special Indirect Tax Analysis Hangout of Taxsutra Budget 2017. And we called the theme of this budget as Will Finance Minister Arun Jaitley be able to break the Chakravyuha after the demonetization? The reactions so far have been largely positive. Several changes in the direct tax side, which have been announced, and fine print actually suggest many more surprises. On the indirect tax side, no significant amount announcements in the budget speech, similar thing has been reflected even in the fine print, that is the finance bill that we've studied in the last few hours. But devil is always in the detail, and to take us through all the insights and analysis, we have Mr. Lakshmikumaran, the founding partner of Lakshmikumaran Sridharan, who is joining us from Delhi. Thank you so much, sir, for joining us today evening. And I'm also joined by my colleague Aditya, who's assistant editor with our indirect tax portal. Sir, do you think Arjuna was able to break the Chakravyuha this time?
He is trying, definitely. Definitely has tried a lot.
Right. So people were expecting that in light of GST, not many changes would be made. Do you think that perhaps this was a last opportunity to build further bridges between the current indirect tax regime and the GST regime? And did Jaitley miss any such opportunity today?
Yeah, it's a very good question. As far as the GST implementation is concerned, we don't find any specific provisions which have been made in the law. Obviously, we can't expect. But the budget speech specifically mentioned that the difference has been completely, or at least most of it has been overcome. The GST Council is now progressing well, and probably we may expect sometime in July. But what could have been done between now and July is that whatever is the rate they wanted to levy on the goods and services on the GST portion, they could have attempted now, so that at least in the manufacturing side and service sector side, the people get used to that rate as when they produce, as when they go nearer to the particular date. That is one. Second, this also would have meant some reduction in excise duties, because some of the commodity would have attracted lower taxes. But there have been some criticism somewhere or comments for demonetization. There is a slowdown in the economy. So reduction in the excise duties in tandem with the proposed rates in the GST could have given at least those core sectors, because the lower rate of taxes are going to be levied only in respect of those items which are mass consumption or used for core sector, etc. That could have actually helped the industry. But in any case, I think the revenue loss was looming large in his mind, and therefore I think he did not attempt that particular bold initiative of rationalizing the rates more or less are equal to the rate which will come in the GST. That one of the opportunity probably finance ministers missed at this point of time.
Right. So if we take a look at the broad budget collections, budget estimates for the next year, not much significant increase has been estimated on account of indirect taxes. A huge increase is seen in the personal tax collections next year. But specifically coming to the indirect taxes, we will see hopefully GST implementation, which will be for the part of the year. Any thoughts on how the budget numbers on a broad basis, particularly from indirect tax, have been stacked up? Do you think they are realistic, or do you think they are they have been very conservative in these numbers or very aggressive? What's your sense on the broad indirect tax budget estimates?
I look at this slightly differently. When you take the indirect taxes, you must take the customs out, because that is not going to be part of the GST.
Right.
As far as the customs are concerned, he has more or less maintained the status quo, excepting for certain concessions which we will discuss separately. Especially with regard to the oil exploration companies which are using the equipment under the international bidding. There was no provision as to what to do after the project is over, what to do with the machines. Now there is an escape route, or at least way out, as to what to do with these machines on payment of duty, etc. Similarly, certain concessions have been given for producing Make in India program, etc. We will discuss separately. Leave alone the customs portion. As far as the excise and service tax is concerned, the approach seems to be conservative, maintain the status quo till whatever time the GST will be implemented. Once GST is implemented, at that point of time only, the center's responsibility of compensating the states if there is a shortfall will start. So till then, enjoy the revenues from the service tax as well as excise as of now, and let's see what happens after the 1st July or whatever. This seems to be the approach of the finance minister. As far as the budget estimates are concerned, you are right. They are on the conservative side. They don't want to put in a big number, etc. at this point of time. Because by and large, they are maintaining the status quo.
Right. You mentioned about service tax, and we have few changes in the service tax provisions, and I will request my colleague Aditya to quickly summarize the key changes. And sir, then will be great to have your insights on any of these changes. Aditya?
Certainly. The first change, which we can highlight over here is regarding the exemption which has been granted to one-time upfront charges. Say we can call it a premium or something, which in case of long-term leaseholds given to industrial unit by the state government. So that is one, and this has been given a retrospective exemption. The second one that I want to highlight is regarding the clarification given in Rule 2 in Rule 2A to say that the value of the value of the service component in a composite works contract which involves transfer of goods along with land. The service component will not include the value of land. So there is a specific clarification which has been given. And the third one is regarding an amendment to the CENVAT credit rules, where the explanation with regard to reversal of CENVAT common input tax credit, where the value will not include the services by way of giving loan and deposits and all those, where the consideration is rent or is interest or discount. This exclusion is not available to banks now. So your take on these amendments, sir?
Yeah. So bank, real estate, these are the few sectors which might get impacted due to the service tax changes, sir.
I mean, I look into it. As far as the retrospective amendment for the premium or a salami which is being paid, the history is like this. Various state governments, bidco companies, corporations, they get the land from the various state governments, either government land or the bought out land. They develop the land and then give to various industrial units for long-term lease, 99 years, 50 years, or whatever. It has got, because and most of the handing over the land, developed plots, is for the lease for 99 years or so. There is an annual lease rental being charged. Over and above that, there is a land cost, that is the cost of land acquired and development cost. These two have to be necessarily collected upfront. This we call as premium, some people call salami, whatever name. There has been a dispute between the department and the assessor that this salami is it taxable under service tax or not. There is a very good decision of the tribunal saying that it is not taxable. There are some different opinion on the particular thing, but ultimately the tribunal took a view that it is not taxable. But department seems to be not happy, and then they are, as usual, filing an appeal with the Supreme Court. What I was told. Recently, I argued a case similar to this particular thing, and I mentioned that the government intention seems to be on a particular date. They say that on this particular we don't want to collect the tax. Therefore, the problem came because of the retroactivity for the period prior to that date. This amendment now makes it clear that the government does not want to collect any service tax on this component. But actually, it is the land value itself. When you buy a land and pay 10 crores of rupees, and then you pay service tax on it particularly, it's stupid. That is why the tribunal has taken a view that as far as the salami and the premium is concerned, it is representing the land value, capital value. As far as the lease rentals are concerned, it is the yearly rental you are paying. Actually, these are virtually sales. There should not be levy even on the lease rentals. But the tribunal took a decision that there is a lease rental you have to pay. So it's like a very small component. But the department contention that you must pay tax on the premium portion actually represents the value of the land, which is not correct. Now, what the amendment has made now is that they are recognizing that the premium is indeed the price for the land, and real estate, you can't price charge for a land or a building, you can't charge service tax on it. And therefore, they realize this particular thing and then they exempted for a particular date. And now the amendment today also, the cost also you not correct. So that is the principle as far as the salami is concerned. As far as this, the land value, the valuation is concerned, if you remember that there is a Delhi judgment, Justice Murali judgment, wherein he has said, in the case Suresh Bansal, that in a composite work contract, when you are going to give a developed fact, which include value, the undivided value of the land, the construction cost, the services, all put together, and the revenue wanted to collect the tax on the whole, and there was no provision for excluding the value of the land, etc. The rules were not made properly. Therefore, the levy was struck down by the Delhi High Court, saying there is no machinery provision for separating value of the land, etc. Therefore, levy itself was bad. So now what they have done is, they are framing the rule, estimating value of the land, and falling in line with the judgment of the High Court, but they are creating the rules. Therefore, the vacuum which was there, in the absence of any rule, the levy was struck down, the levy is revived, but excluding value of the land. So this is the amendment that we made as far as this excluding value of the land. In the last time, in the case of CENVAT, of the interest, you must always realize, as the interest is concerned, in your hand and my hand, as a person who are investing money in the bank or borrowing money, interest is a cost to us. But if you have excess money when you deposit in the bank, it is called passive income. You don't do anything. Unlike in the case of factory, manufacturing, you do something, or a lawyer will do something to get fee. With respect of interest, dividend income, etc., they are called passive income. You don't make effort to get it, except in this. But in the case of a bank, their job is to get interest. So their business is running on the interest, whereas you run the business not on the interest, but on doing other things. So therefore, this particular amendment in CENVAT recognizes these differences. So therefore, it says very clearly, as far as the interest is concerned, bank interest is concerned, if it is a bank, you treat it differently, but non-banking institution treat differently. All that they have done it, they have recognized it is qua party, this particular interest will become excludable or includable. That's what they have done it. There is nothing more than that. It's a welcome measure.
Right. Very interesting. Sir, there have been changes made in the rates in the tariff side, both on the excise side and on the customs side. Any surprises over there?
No, we must realize one thing. In the service tax, there is an important measure which has happened. They have abolished R&D Cess.
Right.
Research and development cess has been abolished. It's a welcome cess. The two things I can see. With the abolition of this R&D cess, one thing is clear for the GST is concerned, because so long as R&D cess was there, under the GST it's not getting subsumed.
Right.
I was always worried that this is going to continue. One. Secondly, it becomes import of services. There is an exemption always saying that excluded value is R&D cess. So therefore, what is available as a credit for the users of the technology was only that portion is CVD paid or
Right.
service tax paid on the service portion minus the R&D portion. So therefore, there is a cost to them to the extent of R&D. Whatever R&D cess was paid becomes a cost to the importer.
If
Now,
I'm-
abolition of R&D, you will charge the full service tax on the importer services and full available as a credit to you.
Right. If I'm not wrong, the R&D cess was about 5%, and that's a clear saving on the technology imports going forward.
Correct. 5%.
Yes.
Therefore, the service tax is payable full. There will be no
Right.
longer service tax minus 5%. So therefore, 5% became a cost to the importer as far as the technology is concerned. That no longer
Right.
a cost. And that is in line with the R&D, in the GST.
Right. Right. Yeah, that's an absolutely important change. Any other changes on the rate structure? Anything that sort of surprised you, or by and large, you're okay with the rest of the rate changes?
No. When we'll come to rate changes on the service tax again. One small thing, in the negative list, what we're concerned, they are removing negative list, granting the exemption. Like last year also they did. This year also they have done in the case of manufacture other than ethyl alcohol, etc. There is no impact to the industry, but I fear by doing so, in the middle of the year they can withdraw the exemption. That is what my only way. Otherwise, negative list they have to go to the parliament. Now they can do middle of the year. In any case, otherwise there is no impact. That's what I wanted to say. Now coming to the, you are asking me about the excise and the customs rate changes. Are you referring to that thing?
Yes. Yes.
Now, as far as the rate changes are concerned, let us now deal with the customs first. As far as the customs are concerned, in line with the Make in India program, for certain commodities, they granted exemption for the components, fix the rate of duty of the finished goods and the excise angle. Therefore, on the import of those goods, CVD will apply on the finished goods if you are importing the finished goods. But if you are importing the component will be duty free. Use the manufacturer of the finished goods also will be duty free, subject condition. Therefore, this actually adds to the cost, or that the import cost of the finished goods become higher and higher. Therefore, there is encouragement of manufacturing in India. But this particular principle seems to have been given away or given up in respect of this your cash machines, point of sale machines and all. And the exemption has been given on the finished goods as also the components.
Right.
This seems to be slightly away from the normal method of encouraging Make in India. Probably they want to treat this cashless transaction in a different context. And whatever happens, let it come, the machine let it come free or cheaper prices. That's what that seems to be the intention. Seems to be that.
Yeah, if I may add, sir, the finance minister in his speech gave an interesting sort of target on POS sale machines, which should be made available in the country by August and by end of this year, and that's a very ambitious number. Perhaps to make that happen, this change could have been introduced.
No. See, look, by grant of exemption on the POS machines, I do not know it is going to immediately flood the market tomorrow and then all of you will be using machines. I do not know. That is beyond my purview. All I can say is, as far as the POS machines are concerned, the exemption is going to the parts as well as the finished goods, which is slightly away from the normal method of doing Make in India programs.
Right. That's an interesting observation.
Yes. Otherwise, in excise, as also in the customs, except in the cigarettes, etc., we don't worry about that. The rate taxes are by and large maintained as such. There is not many changes have been made. Some minor changes have been made with regard to the glass for the manufacture of solar panels. There is zero duty being 6%, etc., which I'm still not able to understand why suddenly they make it. The solar panels are exempt. It is logical that you pay zero duty for the glass used in that. But today, you pay 6% duty on the glass, for solar panel continues to be exempt. That means there is a levy of tax in indirect manner to levy on the solar panel, which I am not able to understand the logic.
Right. Before we come to the provisions relating to the authority for advance ruling, any other significant changes in the fine print around indirect tax proposals, sir?
No, I don't think so. Nothing much to discuss.
Yeah, Aditya, the AR related rationalization and announcements were made in the FM speech as well. Can you quickly tell us what exactly is the change relating to the AR?
So the AR provisions have in service tax, customs, and excise have all been consolidated with those of Income Tax Act. So the definition of AR has also been substituted to refer to the Income Tax Act, Section 245(4). Also, for the first time, I feel that a time period has been given to the AAR to deliver a ruling against a particular application. And of course, it's a little bad news for the applicant, because earlier the fee for the application fee was 2,500, which has been bumped up to 10,000. So that's the only thing. But yeah, these are the overall changes relating to AAR.
Right. So let me take the issue around AR as a forum to you, and a more broader question. First of all, we have a common AR for all the taxes, it seems. Number two, the chairman's qualification has been sort of modified and some sort of time limits have been introduced. Do you think this will make AR as a more effective forum going forward? Because so far we've had a huge pendency and a long delays in disposal of the rulings, which are supposed to be advanced rulings in that sense.
See, look, Amaya, as far as the existing de facto working of the advanced ruling authority today, is that he is the advanced ruling authority for income tax, is also the advanced ruling authority for the indirect taxes, he is also the appellate authority for the central state appellate authority for the central state disputes. So he is actually wearing 3 caps as of today, de facto. The amendment now made is recognizing de facto de jure. They only say that now there is one authority called under income tax law, he will be applying for all. It's exactly what is happening today. So therefore, they are only giving legal clothing to what is actually happening on the floor or on the ground. Now, with regard to the limitation of the time limit which they should apply is a welcome measure, but I do not know whether the advanced ruling authority will be able to deliver within the particular time. And if it does not give, then what happens? Advanced ruling authority ruling become meaningless, or it will be void? No. The judicial pronouncement on the subject saying that any legislation which fixes the time of judicial pronouncement, etc., will be not mandatory, regulatory, or recommendatory. So therefore, it will be saying that legislation saying, as far as possible, kindly do it before the date. Nothing beyond. So therefore, I don't expect anything earth-shaking thing as far as this particular amendment has come. Therefore, tomorrow onwards, we are going to get the advanced ruling first. But if you look at, now that we asked this question, look at the way in which the advanced ruling being given in other countries. Like US, any person, an importer or exporter, can make an email reference to advanced ruling authority. And there are many commissioners of customs all over the US, West Coast, East Coast, Middle West, etc. And they read it. If the information is full and complete, they give a clarification over the email, or if they want some extra information, they provide it. And that is binding on the person. But we have made the advanced ruling authority the highest retired Supreme Court judge. There is a forum, you make an application, it is sent to the concerned commissioner will reply, then there is a lawyer there, the lawyer here, arguing, etc., etc. We have made the process of, I would say, I won't say cumbersome, but at least labyrinthine. So therefore, the legislature itself is responsible for the the process of getting the advance ruling in time. I don't know why each commissionerate could have an advance ruling authority. And you refer to them and they will answer. If there is answer, if you can in fact provide appellate by machinery to the advance ruling authority. If there is anything wrong, both the sides can go on. That is a bigger question. I don't think we can answer this question now. But your question whether the amendment made now would make a big change in getting the ruling faster, etc., I have serious doubts.
Right. So just one more aspect which you also mentioned, the qualification for the chairman of the authority for advance ruling. So far we had a provision where it referred to a retired Supreme Court judge. Now even a retired High Court judge sort of has been introduced. Will that sort of help the institution per se, or?
It makes no difference because judges who have spent enough number of years of experience in the High Court or Supreme Court, they are fine. Ultimately, what we require is a person dynamic who is able to understand and then provide the answers really faster. Whether it is the High Court judge or the Supreme Court judge, it doesn't mean, but it's not a watering down the standards. There are many High Court judges who don't go to the Supreme Court because their retirement age is coming faster. They are very fit and more competent to handle matter in Supreme Court. So therefore, I do not want to make a statement saying that because they are watering down the qualification of the judges to get the that's not the way. I mean, we have seen many judges of the High Court very competent, excellent judgments, etc., etc. Even when they are heading the tribunals, whether in the ITT or in the CBA or the CSTAT, they provided excellent research and etc. There is no problem at all. So therefore, ultimately, it is a common sense, understand, tax will understand, that's all.
Right. So last two questions for the day and for the evening, sir. Question number one, are you still hopeful and optimistic about GST coming through from July this year?
Yes, sir. I am not only optimistic, I am praying also.
Right. And last question for the evening, sir. If you have to rate the budget on a scale of 1 to 10, overall budget, not just the tax proposal, what would that rating be?
Overall rating?
Yes, on a scale of 1 to 10.
1 to 10, I think I would rate it anything between 7 to 8.
Great.
Because, see, he has not harmed you more, that itself is help. If he has not helped you, it doesn't matter. But at least not much damage has been done. So, to that extent, I think we should be happy and with a good mark.
Right. Thank you so much, Mr. Lakshmikumaran, for sharing your insights and for your time. Thank you so much to all our viewers as well for watching this webcast. Do leave your comments and questions on the webcast here as well. Thank you so much, gentlemen.
Thank you.